Welcome to Tesla Daily News podcast on Friday, December 26, 2025. Today, we're tracking a fresh federal safety probe, new questions around full self-driving after a live-streamed crash, and a demand signal for Cybertruck that investors should not ignore. Story 1. NHTSA just opened a defect investigation into Model 3 emergency door releases, and this is the kind of headline that can hit sentiment fast. Context first. Tesla's minimalist interior design has long been a differentiator, but regulators care about clear, intuitive safety controls, especially in a crash when seconds matter. Details. The National Highway Traffic Safety Administration is evaluating claims that the mechanical door release in certain Model 3 vehicles is hidden, unlabeled, and not intuitive in an emergency. The probe covers approximately 179,071 Model 3 cars, primarily model year 2022. Multiple outlets report the investigation stems from a defect petition and complaints that occupants or first responders may struggle to locate the manual release. Impact for investors. Near term, probes can pressure the stock via headline risk, potential recalls, and incremental warranty or retrofit costs. The bigger valuation issue is regulatory momentum, because any safety action that widens from door release labeling and accessibility into broader design scrutiny can add friction across Tesla's product pipeline. Takeaway. Watch for whether this stays a limited investigation with labeling or owner education remedies, or escalates toward a formal recall with hardware changes. The difference is real money and real reputational cost. Story 2. A live-streamed crash in full self-driving mode is raising fresh questions right when Tesla's autonomy narrative remains central to its multiple. Hook. One viral incident can reset the conversation around autonomy, even if the broader dataset is mixed. Context. Tesla's long-term bull thesis increasingly leans on software, FSD subscriptions, future robotaxi economics, and higher-margin recurring revenue. That means every public safety incident becomes not just a product story, but a valuation story. Details. An article out of India describes a Tesla Model 3 colliding while a user live-streamed with the vehicle in full self-driving mode. The report frames it as a real-world demonstration gone wrong, reigniting debate around system limitations and driver supervision. Impact. The immediate financial impact is usually second order. Tesla does not typically see revenue move on a single crash story. But the stock can move on narrative risk. If regulators or insurers respond, or if the incident is amplified into investigations, it can affect timelines for expanded autonomy permissions and consumer willingness to pay for FSD. Takeaway. Investors should keep two separate questions in mind. 1. Safety performance versus humans in aggregate data, and 2. Whether public and regulatory perception slows deployment. Tesla's autonomy optionality is highly sensitive to the second. Story 3. Cybertruck demand is back in the spotlight because reports say SpaceX purchased more than 1,000 Cybertrucks. Hook. When affiliated companies step in as big buyers, the market immediately asks why. Context. Tesla needs Cybertruck to mature from a headline vehicle into a consistent volume and margin contributor. If demand softens, Tesla can defend unit volume with pricing and incentives, but that often pressures margin. Details. A Yahoo-linked piece citing Electrek says SpaceX purchased over 1,000 Cybertrucks, with estimated revenue impact in a wide range, roughly $80 million to $160 million, depending on configuration and pricing. Impact. On one hand, fleet orders are real deliveries and real revenue, and they help utilization at the factory and supply chain stability. On the other hand, investors may interpret related party demand as a signal that organic retail demand is not as deep as expected at current pricing. That can weigh on forward margin assumptions for the truck program. Takeaway. Watch Tesla's disclosed mix and any signs of discounting or inventory buildup. If Cybertruck becomes more price elastic than expected, the stock's next leg of growth narrative can wobble. Story 4. Tesla's European sales trend is still a concern, and it's showing up in the data. Hook. Europe is supposed to be a stable, high-income EV market, so a sustained Tesla slump matters. Context. Europe has become more competitive with improved legacy EVs and aggressive Chinese entrants. Price competition, product cadence, and incentives all matter, and Tesla's market share is sensitive to all three. Details. A report referencing the European Automobile Manufacturers Association says Tesla registrations in the European Union fell 34.2% in November versus a year earlier. Impact. The stock impact comes through two channels. First, deliveries. Investors will handicap quarterly volumes and growth rates. Second, margin. If Tesla uses price cuts to defend share, the market quickly reprices earnings power. Europe also influences brand perception globally. Weakness there can change analyst tone. Takeaway. Into year-end, investors should watch whether Tesla stabilizes with refreshed Model 3 and Model Y mix, financing incentives, or localized production efficiency improvements from Berlin. Story 5. Options and positioning look mixed, suggesting traders are divided on near-term direction. Hook. When the tape is quiet but options flow is mixed, it often signals an information vacuum ahead of a catalyst. Context. Tesla is a high-volatility name where options activity can be a leading indicator of trader expectations, especially before delivery prints and major regulatory updates. Details. The Fly reported mixed option sentiment with shares little changed. Impact. For investors, this is less about following the options and more about recognizing uncertainty. Mixed positioning can amplify moves on the next big headline, good or bad. Takeaway. If you're trading, size accordingly. If you're investing, use volatility to review your thesis, deliveries trajectory, margins, autonomy progress, and regulatory risk. Story 6. Competition is pushing the EV tech bar higher, especially on efficiency and charging, and that shapes Tesla's product roadmap pressure. Hook. Rival claims are getting louder on range, charging speed, and energy density. Context. Tesla's edge historically came from battery, powertrain efficiency, and charging network scale. The network still matters, but consumers increasingly compare raw specs and real-world performance too. Details. Multiple reports highlight competitors pursuing ultra-long range concepts and faster charging demonstrations, including a Renault concept claiming over 1,000 kilometers on a charge under test conditions. Impact. Concept cars don't directly steal sales, but they move expectations and marketing narratives. If buyers believe 1,000-kilometer EVs are imminent, they may delay purchases or demand more value, both of which can affect pricing power. Takeaway. Tesla's response will likely be incremental efficiency gains, battery cost reductions, and continued supercharger experience advantages. Investors should watch for battery and platform updates that translate into margin and demand resilience. Let's wrap it up. Today's big themes were regulatory risk with a Model 3 emergency door release probe, autonomy perception risk after an FSD mode crash video, and a Cybertruck demand signal that could be either a helpful fleet boost or a red flag, depending on what comes next. For tomorrow, keep an eye on any NHTSA follow-up language, especially whether the probe broadens, and on any fresh delivery channel checks as the quarter closes. If you want these updates every day, subscribe to Tesla Daily News Podcast and follow us for the next episode as we track the headlines that actually move Tesla's business and Tesla stock.